My grandmother kept cash in a coffee tin under her kitchen sink. Not a lot, maybe a few $100s at any given time. And when I was a kid, I asked her why she didn't just put it in the bank. She looked at me like I'd said something ridiculous and said, "Banks can close, Dax. This can't." I didn't understand it then. I thought she was just being old fashioned. But years later, I found out she grew up during a time when her country's currency collapsed. Not slowly, not gradually, overnight. One day, a bill could buy groceries. The next day, it couldn't buy bread. And that experience shaped everything about how she dealt with money for the rest of her life. She never fully trusted paper again. She never fully trusted institutions again. She kept real things, cash she could touch, gold jewelry she could wear, a house she could lock. I'm telling you this because right now, in 2026, the US dollar is still the world's reserve currency. It's the coffee tin under the global kitchen sink. Every country trusts it. Every major commodity is priced in it. Every central bank holds it. And most Americans have never once questioned whether that could change. But here's the thing: empires don't announce when their currency is about to lose its status. It doesn't happen with a press conference, it happens slowly, then all at once. And if you own Bitcoin, or if you're thinking about buying it, understanding what happens to the dollar isn't optional anymore. It's the single most important question in finance right now. My name is Dax. I spend way too much time thinking about things most people assume will never change until they do. If you're someone who wants to understand the actual mechanics behind what's happening to global money, not the hype, not the fear, the mechanics, subscribe to Life Audit and let's get into this. What reserve currency actually means. Before we talk about what happens if the dollar loses its reserve status, we need to understand what reserve currency actually means, because most people use the term without knowing what it implies. When we say the US dollar is the world's reserve currency, we mean three specific things. First, most international trade is settled in dollars. When Japan buys oil from Saudi Arabia, they don't pay in yen, they pay in dollars. When Brazil sells soybeans to China, the contract is denominated in dollars. The dollar is the language that global commerce speaks. Second, central banks around the world hold massive reserves of US dollars and US Treasury bonds. As of 2026, roughly 58% of all global foreign exchange reserves are held in dollars. That's down from about 72% in 2000, but it's still dominant by a wide margin. The euro is second at about 20%. The Chinese yuan is around 2.5%. Third, and this is the part most people miss because the dollar is the reserve currency, the United States has a unique privilege. It can borrow money more cheaply than any other nation. It can run massive deficits without the immediate consequences that other countries would face. It can print money to service its own debt because the world needs dollars regardless. This is what economists call the exorbitant privilege. And it's not an accident, it's a system that was deliberately constructed. How we got here, Bretton Woods and beyond. Here's the history. In 1944, as World War II was ending, 44 countries sent representatives to a hotel in Bretton Woods, New Hampshire. Their job was to design the global financial system for the post-war world. The deal was simple. The US dollar would be pegged to gold at $35 per ounce, and every other currency would be pegged to the dollar. So the dollar was essentially as good as gold, and every other currency was as good as the dollar. This worked beautifully for about 25 years. The US had the largest gold reserves. The US had the strongest economy. The US had the military to protect global trade routes. It made perfect sense. Then in the late 1960s, things started to crack. The US was spending enormous amounts on the Vietnam War and domestic social programs. More dollars were being printed than there was gold to back them. Foreign governments started noticing. France under, Charles de Gaulle actually sent warships to New York to collect France's gold from the Federal Reserve. They literally sailed across the Atlantic, loaded up gold bars, and brought them home because they didn't trust that the US had enough gold to cover all the dollars they'd issued. And they were right to worry. In 1971, President Nixon did something that changed the world. He ended the gold standard. No warning, no vote, just an announcement on a Sunday night. The dollar would no longer be convertible to gold. Period. This moment is called the Nixon shock, and it fundamentally changed what money is. After 1971, the dollar wasn't backed by gold. It wasn't backed by anything physical. It was backed by trust. Trust in the US government, trust in the US economy, trust in the US military. And the system still worked because in 1974, the US struck a deal with Saudi Arabia. Saudi Arabia agreed to price all oil sales in US dollars and only US dollars. In exchange, the US provided military protection. This is the petrodollar system, and it meant that every country in the world that needed to buy oil needed to hold dollars first. That's the foundation. That's why the dollar is the reserve currency, not because of some natural economic law, because of a series of deals, agreements, and power dynamics that were constructed over decades. The cracks in the foundation. Now, here's where it gets relevant to 2026, because those power dynamics are shifting. Let me walk you through what's been happening. In 2023, China and Saudi Arabia began settling some oil trades in Chinese yuan, not all of them, not even most of them, but some. That had never happened before in the petrodollar era. In 2024, the BRICS nations, Brazil, Russia, India, China, South Africa, plus new members like Egypt, Ethiopia, Iran, and the UAE, openly discussed creating an alternative payment system to bypass the dollar. They haven't launched a BRICS currency yet, but the fact that they're talking about it publicly is significant. In 2025, the share of global trade settled in yuan surpassed 4% for the first time. That's still small, but 5 years ago, it was under 2%. The trajectory matters more than the current number. Also in 2025, several central banks, including those of China, Russia, India, Turkey, and Poland, accelerated their gold purchases. They bought more gold in the past 3 years than in any 3 year stretch since records began. Why? Because gold is the only reserve asset that isn't someone else's liability. If you hold US Treasury bonds and the US decides to sanction you, they can freeze those bonds. They did exactly that to Russia in 2022. You can't freeze gold sitting in a vault in your own country. Here's the pattern. Countries aren't abandoning the dollar overnight. What they're doing is slowly, methodically reducing their dependence on it. They're building alternative systems. They're diversifying their reserves. They're hedging against a world where the dollar might not be the only option. This process has a name. It's called de-dollarization, and it's not a theory. It's measurable, documented, and accelerating. Why this matters for Bitcoin. Now, let's connect this to Bitcoin, because this is where the psychology gets fascinating. Bitcoin was created in 2009, right after the global financial crisis, and the very first block of the Bitcoin blockchain, called the Genesis block, contained an embedded message. It was a headline from the Times newspaper. It read, "Chancellor on brink of second bailout for banks." That wasn't an accident. Whoever created Bitcoin was making a statement. This technology exists because the current monetary system is broken. Governments print money, banks get bailed out, regular people pay the price. Now, here's the question. If the dollar weakens as a reserve currency, what happens to Bitcoin? There are two scenarios, and they're very different. Scenario one is the bullish case. If the dollar weakens, if countries start diversifying away from dollar reserves, if trust in the US monetary system erodes, then the demand for alternative stores of value goes up, gold benefits, and Bitcoin, which shares many properties with gold, scarcity, portability, resistance to confiscation, potentially benefits enormously. In this scenario, Bitcoin doesn't just go up because of speculation, it goes up because it serves a function that the dollar is losing. It becomes a neutral reserve asset, a currency that no single government controls, a store of value that can't be frozen by sanctions, can't be inflated by central banks, can't be weaponized by geopolitics. This is the thesis that most Bitcoin advocates believe. And it's not crazy. If you're a country like Brazil or India and you want to hold reserves that aren't controlled by the US or China, your options are limited. Gold is heavy and expensive to transport. Other currencies come with their own political strings. Bitcoin is the only asset that's truly borderless, truly neutral, and truly finite. Scenario two is the bearish case, and it's less talked about but equally important. If the dollar loses reserve status rapidly, not gradually over decades but quickly over a few years, the result wouldn't be orderly, it would be chaotic. Dollar devaluation would trigger a global financial crisis, credit markets would seize, liquidity would evaporate, asset prices across the board, including Bitcoin, would crash in the short term. Why? Because in a liquidity crisis, people don't buy alternative assets. They sell everything. They go to cash. They go to the safest thing they can find. And paradoxically, in a crisis, the dollar often strengthens temporarily because it's still the most liquid currency in the world. We saw this in 2008. We saw it again in March 2020. Everything crashed, including gold, including Bitcoin, because people needed dollars to cover their obligations. So the timing matters enormously. A slow, gradual erosion of dollar dominance is bullish for Bitcoin. A sudden collapse of dollar confidence is catastrophic for everything in the short term, including Bitcoin. before eventually being bullish in the medium to long term. The role Bitcoin actually plays. Let me reframe this because I think most of the Bitcoin conversation misses the point. People ask, will Bitcoin replace the dollar? And I think that's the wrong question. The right question is, what role does Bitcoin play in a world where no single currency dominates? Throughout history, the global monetary system has gone through transitions. Spain dominated in the 1500s, the Netherlands in the 1600s, France in the 1700s, Britain from the 1800s through the early 1900s, the US since 1944. Each transition took decades, and during each transition, there was a period of fragmentation where multiple currencies competed for dominance. We might be entering that period right now, a world where the dollar is still important but not singular, where the yuan handles Asian trade, where the euro handles European trade, where gold plays a bigger role than it has in 50 years, and where Bitcoin exists as a neutral, apolitical layer underneath all of it. Bitcoin doesn't need to replace the dollar to be valuable. It just needs to be useful in a fragmented monetary system. And a fragmented monetary system is exactly what de-dollarization creates. Think about it this way. If you're a multinational corporation doing business in 30 countries, and each country is pushing its own currency for trade settlement, you have a massive coordination problem. You need to hold reserves in 15 different currencies, each with its own inflation rate, its own political risk, its own exchange rate fluctuations. That's expensive and risky. Now imagine you could hold a portion of your reserves in an asset that's accepted everywhere, that doesn't belong to any government, that has a fixed supply, and that can be transferred anywhere in the world in 10 minutes. You wouldn't put everything in it, but you'd put something in it as a hedge, as a neutral settlement layer, as insurance against the specific risk that any one government decides to weaponize its currency against you. That's the actual use case for Bitcoin in a post-dollar dominant world. Not replacement, complement. What history tells us about currency transitions. Let me give you the historical context because I think it grounds the whole conversation. When Britain lost its reserve currency status, it didn't happen because the pound became worthless. It happened because Britain's share of global economic output shrank, their debt levels became unsustainable after two world wars, and a new power, the United States, offered a more credible alternative. The transition took roughly 30 years, from the 1920s to the 1950s. During that period, both the pound and the dollar served as reserve currencies simultaneously. It wasn't binary, it was gradual. And here's the key detail. During that transition, real assets outperformed paper assets. Gold did well, land did well, equities in the rising power, the US, did well. And people who held their wealth entirely in British government bonds, the safest asset of the previous era, got destroyed by inflation over 30 years. The lesson isn't that the current reserve currency goes to zero. It's that it loses purchasing power gradually while alternative assets gain. And the people who recognized the transition early and diversified into those alternative assets preserved and grew their wealth. The people who assumed the status quo would last forever got slowly eroded. If that pattern holds, and I think there's a strong argument that it does, then you don't need to predict whether Bitcoin goes to $500,000 or $50,000. You just need to recognize that holding 100% of your wealth in dollar-denominated assets during a period of de-dollarization is the equivalent of holding 100% in British pounds in 1935. It might feel safe, it might be the default, but it's historically the wrong move. The psychology of monetary transitions. Here's the part that I think is most important and least discussed. The psychology of living through a monetary transition. When your grandmother's currency collapsed, and I realize not everyone watching has that experience, but enough people do, the psychological impact was permanent. She never trusted paper money the same way again. She kept physical assets, she diversified, she planned for the scenario that most people said was impossible. Most Americans in 2026 have never experienced a serious threat to the dollar's dominance. They've grown up in a world where the dollar is king, where US Treasury bonds are the risk-free asset, where the idea that the dollar could weaken significantly feels like science fiction. But here's what I've learned from studying financial history. Every single person who lived through a currency crisis said the same thing afterward. We never thought it could happen here. The British didn't think it could happen to the pound. The French didn't think it could happen to the franc. The Argentinians have watched it happen to their peso 3 times, and each time people said this time is different. I'm not saying the dollar is about to collapse. I want to be very clear about that. The dollar is still the strongest currency in the world by most measures. The US still has the largest economy, the deepest capital markets, and the most powerful military. Those are real advantages that aren't going away overnight. What I'm saying is that the conditions for a gradual transition are in place. The debt to GDP ratio is at historic highs. The weaponization of the dollar through sanctions is pushing countries to seek alternatives. The BRICS alliance is more coordinated than ever, and the technology for alternative monetary systems, including Bitcoin, now exists in a way that it didn't during any previous currency transition in history. What you should actually do. So, what does this mean practically? Here's how I think about positioning for this. First, don't panic. This is a multi decade process, not a multi month event. You have time. But the advantage goes to people who start thinking about it now rather than reacting to it later. Second, diversify your currency exposure. Most Americans have 100% of their wealth denominated in dollars, their salaries in dollars, their savings are in dollars, their investments are in dollar denominated stocks and bonds. Their house is priced in dollars. If the dollar weakens over 10 or 20 years, every single one of those assets loses purchasing power simultaneously. Own some international assets, own some real assets, own some things that aren't tied to any single government's monetary policy. Third, understand what Bitcoin actually is in this context. It's not a get rich quick scheme. It's not a replacement for your savings account. It's a hedge against monetary system risk. The same way gold has been a hedge for 5,000 years, except it's digital, it's portable, and it's built for the internet age. A small allocation, 5%, maybe 10% of a diversified portfolio, is not a gamble. It's insurance. Fourth, pay attention to the signals. Watch the dollar's share of global reserves. Watch central bank gold purchases. Watch how many countries are settling trade outside the dollar. Watch the BRICS payment system development. These are the leading indicators. By the time it's on the evening news, the transition will be well underway, and the opportunities will have already been priced in. Fifth, and this goes back to my grandmother, respect the experience of people who've lived through currency crises. Americans tend to dismiss these stories as something that happens in other countries, but the mechanics are the same everywhere. Governments spend more than they earn. They borrow to cover the difference, they print money to service the borrowing, and eventually the math catches up. The only question is timing, and timing is the one thing nobody can predict with certainty. So instead of trying to predict it, prepare for it. Build a portfolio that survives multiple scenarios, hold assets that perform differently under different conditions, and never ever assume that the way things are today is the way they'll always be. Here's where I'll leave you. My grandmother kept cash in a coffee tin because she understood something that most people in stable economies never learn. The systems we trust with our money are human creations. They're built by people, maintained by people, and they can be broken by people. The US dollar's reserve status isn't written in the laws of physics. It's written in trade agreements, military alliances, and institutional trust. All of those can change. All of those are changing slowly right now. Bitcoin exists as a response to that reality, not as a perfect solution, not as a guarantee, but as an option that didn't exist during any previous monetary transition in human history, an option to hold value outside of any government's control, an option to participate in a monetary system that's governed by math instead of politics. Whether you buy Bitcoin or not is your decision, but understanding why it exists and what role it could play in a changing monetary landscape, that's not optional anymore. That's financial literacy for the world we're actually living in. My name is Dax. This is Life Audit. If this made you think about your money differently, hit that subscribe button. Drop a comment and tell me, do you think the dollar's dominance is safe, or do you think the cracks are real? I genuinely want to know, and I'll see you in the next one.